Yeah, hello guys. Good day once again. Here is Saka again. And last week we did some analysis on New Zealand US dollars. Yeah, predicting into the future of 500 pips. Yeah, a lot of people came into my DM saying I said the market will be moving 500 pips last week. No, I didn't say that. I only predict into the future. The future is never tomorrow. The future can be tomorrow, next tomorrow, something like that. And I think a lot of people that say this, they say that because they never understand the rudiments of the market. They never understand how the market moves. Yeah, the market does not just move in a linear motion like in just a single form. The market moves sideways. I mean sideways like this, like that. So the market can also move this way. This is an uptrend, like you know. Actually, there's no market that actually moves like this actually. But we just use this as should I say, as a body of should I say a body of should I say templates of the market movement. So the question is, why do you think they have all of them like this? This is the psychological part of the market I want you guys to understand. When I tell you the market is going into the future 500 pips, I don't mean the market will just start dropping. Zoom. Yeah, I'm not the market maker. I trade what I see and I see what I trade. So that's how I do my thing. But based on my monthly analysis, my weekly analysis, I'm sure and I can bet anything I have with it. And the market is going to drop 500 pips. Yeah, based on my analysis. So based on that, I don't really expect the market to drop in one form because me myself, I'm not a swing trader. I'm a day trader. I end all my trades six max every day. So based on that, let me okay, good. Based on that, so all those people coming to my DM asking me like, guy, you said the market is going to drop 500 pips into the future. Yes, I said that. I never give you time. This before this candle can reach this side, it can be up to like 3 months, 4 months, 5 months. In fact, maybe throughout this year, yeah, before it reached this side. But I'm sure the market broke this support and became a resistance is going to drop. I'm very sure of that. So and based on that movement, there are two things that can happen in the market. It's either we find the market move, from this side to this side, then drop. Yeah, we can have something like that. So, and don't forget that we have a trend line here. Sorry, don't forget that we have a trend line here. So we can have this something like this in this market. If you don't understand these trend lines, you can visit last week, the last video before the previous video before this. So you will see or how I did these lines and everything. I'm a trend line trader. I trade psychological levels too. I'm still gonna take you guys on my chart and show you how I tackle last week's trade and see what to expect for next week. But based on that, I really want to explain something to you guys, and I want you guys to take it as a take home. You understand? So in this market, there's something they call supply and demand. This is the thing that a lot of traders don't understand. A lot of traders don't understand the law of support and demand. We always fail to ask questions. Everyone that passed through the basics forest lesson, you're all told that markets move this way, impulse move correction, then impulse, then correction, then impulse. Why is the market moving this way? Most of us fail to ask this question. So most of us actually have problem in, should I say, in tackling entries and exits in the market, something like that. So imagine, see this. This is actually a random drawing. I never measured anything. But see this. See this. See this. So I want to derive a lesson from this class. The lesson is the law of supply and demand. Why is it that whenever they are buying, they buy up, there's a little retracement, they keep pushing up, a little retracement, they keep pushing up. It's a normal psychological level. It is the law of demand in play. Where there is where the demand is high, where the demand is high, the price will always go high. Where the supply is much, the price will always go low. So, for example, now New Zealand US dollars. If the demand for New Zealand is much, you understand? So people that are willing to exchange US dollars for New Zealand, the price of New Zealand will start going up. Please, I want you to, if you don't get this illustration, please go back, repeat it again. Hear what I'm saying again. Please hear it again, because it's a simple, basic understanding that you really need to know. You should have it at the back of your mind that you're not actually trading candlesticks. You're actually trading, should I say, things that are happening in real life. These people are actually exchanging millions and billions of dollars and pounds on counter table. So this your chart is a reflection of their action. Do you get what I'm trying to say? So if the demand of New Zealand dollar is high, which means a lot of people are willing to have New Zealand dollars in their bank, in their wallet, maybe because there's should I say an increase in interest rate on New Zealand dollars. You understand now? Based on normal human disposition, you need to get that New Zealand dollar in your pocket, so you're expecting them to increase interest rate so that you can exchange it back for the interest on it. You understand what I'm trying to say? It's as simple as that. These are the basic things you need to pass through before you even come for any mentorship. Go online, go on YouTube, go see those kind of videos on supply and demand in Forex, not just strategy now, basic supply and demand. So why is it that when market is having an impulse movement, there must be correction? What are the corrections doing? Why can't the market just start going? This is the simple truth. For every buy, there must be at least a 40% sell. This is the principle of Fibonacci. So see this. From at least, in fact, see this. Let me just increase this. This is 61.8 level. This is 50 level. For a good market condition, when you say a trending market, trust me, no matter how bullish the market can go, you should expect the market to dip into maybe 40% or 50% level. What is the meaning of this? What is this actually trying to tell you? It's as simple as buyers came into this market and they bought the market from this side, from this point to this point. It's just like you having shoes. You're having shoes. You want to sell your shoes. Or you're having money with your dollars. You want to buy shoes with your dollar. I get what I'm trying to say now. Buying shoe with your dollar, which means there must be someone at the opposite end that is willing to sell to you. Do you get that? So now, people want to buy New Zealand dollar now. They bought from here to this side. Equivalently, as they are buying, they are actually selling US dollars. Are you getting me? During that process, trust me, they are not just buying from let's say from the wind. People, it is actual people that is actually selling that New Zealand dollar to those that are buying. It's as simple as that. This thing is, I wish I can explain more. Come on mentorship if you want more deep explanation on this, because it's just normal human disposition. So based on this is the reason why my 500 pips into the future won't happen overnight. As people are selling New Zealand dollar that is dropping now, some people are at the other end buying. So you should expect an impulse move, a correction of buyers, impulse move of sellers, correction of buyers again to balance things up. That's the reason why you are seeing. See this. Look at it. People sold this market here. At some point, buyers have to intervene in the market and buy this market up. Before sellers come in again, they bought the market up. sellers again, just to buy the market up, so that there will be equilibrium, there will be balance in the market. I believe you guys understand. This is the reason why the market can't just drop 500 pips, bam, into the future. And you guys be like, you said it. No, the market has to go to drop 500 pips, but not now. So we should, I think last week, said I had even more buys than sell. But because the market was actually doing the more of going up than dropping. Yeah. So last week was an uptrend from Monday to, then from Monday, it dropped Monday, then the market. I will take it to my chart very soon. So that is that concerning that. So based on this fact, I think I refined the trend line. I refined the trend line back to weekly. For those that miss that, to weekly. Yeah, sorry for this. Sorry for that. So, okay. Okay, to weekly, then I add this, the law of trend line. If it's an uptrend, you have to connect two troughs. It's a downtrend, two peaks. Okay, so that's concerning that. So after this, I add these. Yeah, so I add these trends in trends. Yeah, that's how I trade. Trends and trends. So that's that. I think you guys understand to this level. So let's just jump to 15 minutes. So let's jump to 15 minutes and let's see what the market offers. So 15 minutes, or let's say 1 hour. What do we have? Was 1 hour and 4 hours. Okay. Yeah. So I'll be explaining a lot once I get to my chart. The manipulation that happened, how I tackled the manipulation, and how I knew the market was going to drop because I caught the trade. And I wish I can just share my phone with you guys and you guys see. Wait, let me see if I can share my screen with you guys. Okay. So okay, guys. So that is, I've loaded my screenshot, my system now, so we can now see the trades I took and how I tackled them. So let me just go to my chart trade up so I can briefly explain things that happened there. Okay, sorry, my charts look messy. Okay, the aim is not to keep a clean chart and not to make money, but to, not just to make it rush to like that. So, but let's just keep going and let's see what happens. Those that that are on my WhatsApp, I share all my trades. Yeah, they participate in almost all my trades. So let me talk this on. So let's see how they started. So good. Yeah. So this is so good. This is where I started from last week. So you know how I do it. I'm a trend line trader, so that's why you're seeing all this line across and something like that. So last week I took this trade. Yes, I took this trade here last week. Why did I take that trade? Number one, notice, please, this thing I'm telling you, I'm not just telling you so that you guys can feel like this guy is a Superman. No, it's simple. Just keep it very cool and you make money. Okay. The first trade I took was this trade. I saw my hem pattern and I saw cyclic candles. These are all these guys. They are all cyclic candles. Let me change the color now. Let me change to something like this. All these guys in this box, they are all cyclic candles. So the market coming out of these guys and overextension just to clear out liquidity of those that are willing to, sell, that are willing to sell, that are willing to put down their sell here. So this is just, I found out that this is just an overextension of buyers, you understand? So, and I saw my pattern. You understand my pattern? My pattern is for sale. It's you actually need to be on mentorship before you can see this. I'm telling you, it's not just trying to take your money. I will show you my charts now and see how much I make. I'm making even in a week. So I don't want your money actually. So I'm just telling you this so that you can add it to your own arsenals of trading. So So I see my M, I'm seeing my M there. I saw my M there. So I shoot it down. Understand? Over 30 pips cut. Yeah. Immediately after seeing that movement, I saw that pattern again. That is for buys. W is as simple as just keep it simple. W, I rolled up. Like I fire. Like I bought aggressively. Yes, I bought aggressively there. So comfortably. I did it comfortably. So after seeing that, I actually expect to see some some I was scared here. I was actually scared here because I won't lie to you. I was actually scared here when I saw this rejection. But I had to keep hold. The reason I'm keeping hold is because of see. Sorry, let me delete this move then if I can do that. Let me delete this move first. This move here, this move is an actual impulsive move. Do you get what I'm trying to say? It's an actual impulsive move. If there will be a correction in which I thought this was actually worse, I thought this was a correction. But when I saw the correction went up, it came down and it broke, it giving me something like this, giving me a break here, giving me a break here, giving me a break here. Wow. Okay. Let's see what's up with this market. And according to those that trade smart money, they can testify to this. Yeah, I'm seeing my other block here that was mid. I had a correction here. Even I don't trade that block, but I have to went through the course because those guys are saying we retailers are foolish. Yeah. So I was scared then. Is my strategy bad or good? I had to take the course. And I later find out that it is even, I'm not saying it is trash, but we are doing the same thing because even they themselves, they get haunted sometimes. So what's the cocoa? What's the main deal there? So that's it. So wow. So that's another block there. Okay. So let's shoot long. So I long this market and I made a lot here. I made a lot here. So then I found out that the market didn't just didn't just move up. It broke this trend line. The market went ahead. The market broke this resistance here. The resistance here. The market broke it up. Okay, beautiful. So we're having a change of trend. Okay, that's nice. That's nice. So then I add my trend line there immediately. I'm supposed to take this trade, but now I'm in a uptrend and I'm seeing no confirmations around, no confirmations at all. The only confirmation I'm seeing is this my my eye of the week. Where is it now? This is my eye of the week. This green line. This green line, my eye of the week. So I can't just reach just one confirmation for that. So I had to have multiple confirmations to strengthen my entry position. So then I allowed the market to drop down a bit to this side. Then I had my W again. I shoot long. It's simple. Just keep it simple. You get everything. It's simple. I'm telling you. Though some of you might need my mentorship because to spot them can be easy, bro. This is my 7th year in this game. 7th or 6th, yes, 6th or 7th. So that is that. I started in my, should I say grade 1? Okay. So that is the W. So getting that, seeing this top here, I was so confident that this market is going to drop. Don't forget that we actually had an analysis that is saying we should expect more sell in this market than drops. Yes, we should expect more sell than drops. So I had that in my pocket that this market should actually drop. So I had confirmations. Number one, I have my psychological level around, which is this guy. My psychological level, this popular line here, and I have this here, this green level, eye of the week. Yeah. So seeing this movement up, I actually thought that this should be an overextension because I should see a correction. Then I was actually thinking of something like this as the market pushed up. I should expect something like this on this guy. Then actually I was explaining on this guy because this would give me a 3/4 confirmation, which is my psychological level around, my high and low around, my trend line around, my sharp pattern. In fact, it's 4/4. My sharp pattern around. So I'm going to, make it something like that, just as my mentor would say. So then I was expecting something like shoot up, something like that. That was what I was expecting there. But after seeing this movement up, I saw this W. I saw this W here. Yeah. So this is where I exit this trade. So I saw this. Okay, beautiful. I saw this again. Double M. You understand? Just like head and shoulder, as you were taught in as we were taught in basic forex lessons. Head and shoulder. Oh yeah, oh, we are pushing down. So I went in heavily at this spot in particular, at this spot. So as we were moving, I thought I would be seeing a little rejection. Maybe the market coming rushing down here, then rejecting up immediately. No, I saw the market just keep going down. Wow. So we are going down for real. So beautiful. So after that, I took this loss here based on my on my W and M pattern. Even though the market later went my way, like it went a lot in my way. So I took this loss here, and how did it happen? I saw this. I saw this. I saw this movement. I saw this movement. And I had my entry upon this green candle. Upon this green candle. And I have my stop loss around here. I had to trade something like this. I had it like this. I had it like this. Yes. I was targeting the market, pushing at least up to this point. Yes. That was my target. So I had my stop loss around this side. This side. Yes. This shadow of this bearish candle. I had it there. So it was a very good trade for me because it's almost like 6/1 or 7/1, 7/1 trade. So it's a good trade for me. So I took the trade, but they went onto my stop loss. All the issues, these Asian session people, they wanted my stop loss, then start going my way. See, they start going my way, start moving up, start pushing up. So that's that. I had to let the trade go. Even though I supposed to enter here, I supposed to have entered in that position here. I'm supposed to have entered in that position here at this point. Yeah, because I'm seeing my confirmations there. Number one, I'm seeing my psychological level around, which is this guy. Which is this guy here, my psychological level around. I'm seeing trend line around. Because if you put your Fibonacci, if you made this impulse move, it will be overextension. In fact, past the 70 or 80 level. So it's an overextension. So it's a good trade for me. So I should have had my entry there. So, but I didn't because I have my principle and rule in which I follow. I follow my rules duly. So then after that, I had this minor trend line there. I'm giving you guys my course of entry for the week so you guys can learn and know how to tackle your trades next time. I had this minor trend line there. I had it broken, then I had this my pattern again. I had my pattern again. Impulse move, correction, impulse, then a break. Then the market start doing its nonsense. Then a break. So I had almost like 20 pips or 30 around this size. Yeah. So then after that, I didn't trade. I didn't trade yet. I went long here. Yes. I remember I went long here, even though it was short, very short, but with a very meaningful lot size. I went long here. Why did I? For those that are asking, I actually saw my W again. I saw my W, an impulse move, maybe it's correction, an impulse move, then we shoot up. As simple as that. So then after I exit my trade, around these rejections here, getting here again, I went long again. Yes, you guys are sometimes when I trade and I start looking at my trade, sometimes I laugh like, guy, what are you doing, bro? But that's the best way to trade. Once my mind tells me to exit, I exit. Once my mind tells me to enter, seeing my confirmations, I enter, something like that. So that is how I do it. So I enter again here, checking the you now know the confirmations. See my pattern here. I went long. So see my pattern here again. I went short here. around the side. I went short around the side. So let me just string this. So the reason why I actually went short around this side was I saw this trend line here. Thank God I didn't delete it. I saw this trend line here, and I was actually seeing this pattern here. So now, before that, we now have this trend like a form of a triangle. Do you guys get that? We have it in form of a triangle. We have it here like this. So we have it in form of a triangle. So first touch, second touch, third touch. First touch, second touch, third touch. Yeah. So I expect this to be a fourth touch. So I see this first touch, second touch, seeing this third touch, and seeing multiple candle rejections. Multiple candle rejections. You guys should always remember that. Multiple candle rejections. Am I correct with that? Okay, yeah, correct. So multiple candle rejection. So I saw one, saw two, three. Then this is a downtrend. Then I saw this spike up. Then it's melted down. Wow, we are going down. So I took my trade there. Getting on this trend line, I knew this is actually a strong trend line, and there was actually a news coming, which is the CP high. Yes, I took this trade. I took it, and it was crazy. It was so crazy. So a lot of people were like, "Guy, calm down, chillax." So seeing this touch, it was a 4/4 trade for me. I had my low of the week here. I had my trend line there. I had my chart pattern there. I had my candle rejections there. So I had this impulse move. I entered with one leg because I entered with 0.2 lot size. I will show you guys the screenshots now, but not now. Let me just explain first. So I saw this W. I entered with a very nice lot size, one lot size, a very nice one. So we shoot up. Then getting here, I was expecting the news, because one thing about news you should notice and pay a close attention to is this. Once we are anticipating a very huge news, always notice that the market will love to create liquidities, maybe let's say in form of support and resistance, or in form of trend line for itself, before clearing and start moving it in its normal direction. So this was liquidities for me. And seeing this pattern here, I'll show you the trade now. Seeing this pattern here, remember our M pattern. See this pattern here. After seeing that pattern, I actually crossed my finger. I was waiting. I had this my trend line there. This is my minor trend line there. Thank God I didn't delete them. I had this my minor trend line there, and the market broke that trend line, coming to retest this trend line. A lot of people are anticipating the market to go up, but I actually knew I knew that the market won't go up. I used to have I had this here actually. I had this here. So seeing this candle met down, this green candle met down. Oh, guy, wait a bit. I saw this candle again. I saw this candle flashed up. At that flash, I entered myself, putting my stop loss above this guy here. I'll show you the screenshot version above this guy here. So now, as the news opened, lo and behold, we had a flash down over 100 pips. Yeah, over 100 pips. Flash down, and after flashing down, our sentiment for the market, actually, overall sentiment was the market should go down. Yeah, that was our overall sentiment. So I didn't bother today. I did not bother myself taking this buy. Though I should, because it's the market did all our confirmations, which is the W pattern, which is this, the W pattern, which is this, and it starts shooting up. So I didn't take that. So I waited for the market because the profit was huge enough. I waited for the market to do something like this. Yeah, I took this trade. Yes, sorry, I forgot to put the box because I was in my 6th time. I took this trade. Though I had those that follow me. We remember this trade. We were first cleared out, and I asked them to enter again. Now the market is dropping. So what happened to me here was the same thing that repeated itself here. Yes, the same thing that repeated itself here. So after the next day, which was this is now on Friday. This was on Friday. Yes, this was on Friday. So I had my entry here. my sell entry. Yes, I had my sell entry here. I had my sell entry here. I had my sell entry here. And my stop loss around here. So I had my sell entry here. My stop loss here. So I was targeting something like, no, I was targeting this high. Yes. I was targeting maybe 1/4%. So what they did was they actually they cleared out that position. So I actually had my stop loss above this high because I wasn't expecting the market to reach that place. So, and don't forget that we actually had a trend line coming from this side. See, guys, this, please, if you don't see our last video and you are seeing this video, you might not understand the gimmicks that are happening. But we actually had this trend line there last week. So it was, so let's say it was it was almost same thing that happened at the previous touch of this trend line. See what happened. They had an upward movement. Yeah, they broke it down. The market now went touch this trend line. You understand now? So now see, same thing here. They had this trend line here. They broke it down. The market now later touch that trend line. You understand what I'm trying to say? So seeing that trend line, I knew the market should drop. So seeing that, they took me out by clearing out my stop loss, my stop loss, and I felt bad, but because I was so confident, I entered all the lot I have for the day, which is 1.5 lot. I entered everything. So taking me out there is like reaching my daily drawdown, not the account drawdown, but my own personal drawdown I give myself. So I have to be a disciplined trader. So I couldn't enter again. So I felt so bad after seeing this move because it's over 50 pips. I felt so bad. So getting here, a lot of people will ask me, why didn't I take this trade? Sorry now. Let's have this. Okay, let's have it. Why didn't I take this W trade? The simple answer is this. That's the reason why you have to have the overall movement of the market before you actually take any trade. I have the overall movement of the market. The market is going down. The market is going to toss my trend line so that the market is pushing down. The market is going down. The market is going down. It's going literally down. So getting that, okay, that's nice. So let's see what's gonna happen. So having my second entry here, I had an entry here again, and same thing that happened here. But this time I'm not giving my money away to the market. I entered with one leg. So they took me out here. Seeing this touch here, which this is support turning to resistance here, I made $900 of this trade. This is not a swing trade, a day trade, yes, $900. I'm going to show you the proof now. So let me just share my screen with you guys. Okay. Okay, let me okay. So let me share my screen with you guys. Okay, yes, I think. Let me share this now so you guys will see. Okay, sorry, this was some previous trade that I had. This is what I call stacking. You can see stackings, just 0.1, but there's a way you do that. Okay, sorry. Okay, I think this was the news I was trying to explain to you. This was the news. Let me share my screen again. Share screen now. Let me share the screen now. Share. This news. This was a trade. So that's that trade. So let's see again. Let's keep moving. So that's that trade. You can see the charts pattern. So let's keep going. Let me see if I can. Let's see. Okay. Which trade is this? This GBP. This is NZD. Okay. Let me try and find this trade. Okay, yes, this was after the news. This was that move I told you I didn't take. Yes, I didn't take that move. This was that sell. I took. Let me help you. Let me find it. Let me find it again. So let me find it now. Okay, this was it. Yeah. I didn't even mark it. See, I didn't even mark it. This was the sell I took. I took this sell. Yeah, I took the sell. So I took that. So let me see again. Okay, let's keep moving. Okay, yes, I knew I exited that trade. Okay, yes, this was this was a trade I took that the market went against me, so I had to screenshot and send to my student that can you see the market cleared our stop loss, then start going our way, something like that. Then yeah, this was the loss we incurred that day. This was on a pro firm on a pro firm challenge. So I had a drawdown of $98. It was so sad for me because the market later went my way. So I felt so very sad. But I later, this was the move I was telling you. This was the trade I was talking to you about. So after seeing that, I actually saw this move. I entered here, they cleared me out, but I entered again because I was so confident that the market should drop. The market should drop. I was so confident about that the market should drop. So let me see if I can. Yeah. So after that, see how we roll it down. Imagine this is almost like let me see if I can have the results here. Yeah, this is almost $300 for me. So from the losses I had, I recovered and I'm moving up to $200 now on my pro firm challenge. So that is that on that. So this trade was actually this one. I couldn't recover the previous ones. I think I deleted it on my system. Next time I won't on my phone. Next time I won't delete it so that I can share with you guys. So that you guys won't say that it's just explaining stuff and it's not really should I say it's not really trading it. Yes, this is what I trade. So this is it. This is the move. So with me saying that, let's go to what we should expect for next week. Oh, I know you guys are here to hear that. So let's go. For me, I'll be looking more to short next week than to buy because the buying will be short while selling will be long. Because I am automatically now I now have this trend line on my screen now, which I'm drawing now. Yes, I'm having this trend line. Trust me, I don't ignore any trend line. Once I see them, I draw them. I'm also seeing this one in which I didn't mean the market didn't close on Friday. I'm gonna go long here. I'm gonna go long here. I'm gonna go long here. I'm gonna go long here, and I will have my stop loss around the side. I'm gonna go long here. I'm gonna go long here. Yes, I'm going to have my stop loss around the side. This will be like around the side. Yes, around the side. This will be like 3/1, 3/1 for me. Yes, this will be like 3/1 for me. So I should have because automatically now we're having this here. This is this was a rejection. So we should shoot up towards the side, then we drop. Okay, but that doesn't mean we should that doesn't mean I'll be correct, okay? Because I'm not the market maker. We only analyze the market based on our psychological level, based on our confirmation. So the reason I'm taking that trade is three things. Trust me, our strategy says once we have 3/4 confirmation, we shoot. Okay. So I have my psychological level here. For those that don't know psychological level is the level in which random human thinking is willing to take to purchase anything or to just bring down or rise up, take up anything. It's just a whole number. Let me just put it that way. A whole number. And it's work with normal human disposition. So which means if you want to buy something for $100, trust me, you can't price that thing to $97. You will like a random number. Will you take -$5? Will you take $90? Will you take $80? Will you take $85? Because that is how human like to work with random figures. And you also notice that around that psychological level, there's always snaps. See, Look at this, like, see, look at what happened at this psychological level here. See, look at it here. Same thing. Look at it here. Look at it here. Look at it here. That is it. Look at this psychological level. See how markets play around psychological level. See, it's here. It's here. It's here. Markets love to play around psychological levels a lot. See, it snapped down. See, it snapped. See it here, it snapped. So that's how psychological level works. So I'm having my psychological level there. I'm having my trend line there. I'm having my what's it called now again? I'm having my chart pattern there. So that's almost like 3/4 for me. So though I'm not going to enter this trade once market open by tomorrow night. Yeah, I'm not going to enter this market. I'm going to wait because I don't like trading on Mondays because it's very dangerous. It is dangerous. Yeah, dangerous. So that is that for that. So we should expect the market to push up a little bit from here, maybe to somewhere around this side, then we should look to short. Yeah, we should look to short. So please, one thing I'll be begging you guys is, no matter the kind of trades you'll be taking, please always monitor your risk management. It is very, very important. More than whatever kind of trading skill you can ever have, your risk management matters a lot. So, for example, this week, I'm having how many trades now? Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, this was Monday for me. So I don't like trading on Mondays. You can see I have a clean. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I had 15 trades this last week, which is this week, this last week, the last week of trading we had. So I lost 1, 2, 3. I lost 3. I won that and stuff. Yeah. So this is what they call when your strategy is having an edge in the market. So if you wish to learn my strategy, you can okay, let me drop my number, my number on the screen. Or let me just drop my mail on the screen so that you guys can just, you can mail me and I can enroll you for the class. It's very cheap, damn cheap. Yeah, I really mean cheap. As cheap can be. Let me get a pen. Let me get a brush. Let me get a brush. Sorry. So let me change the color now. Let me change the color now. Let me change the color now. Okay, what's this? Sorry. Okay. Okay, beautiful. So I think there's that. Let me do this first. Let me drop my mail. You can mail me up. Then we'll talk about it. Okay. So this is my mail. So that's my Gmail. If you're willing to join the mentorship, of course it's cheap. It's just $100. Then trust me, you're going to get a system. The system is not any indicator. Yeah, it's not an indicator. It's something you see yourself. Something you can. This work with almost all markets. If only if you can, have the psychology. In which that's why you actually need mentorship. What I'm telling you is everything I do. But how I apply risk management, how I apply the state of my mindset to them, my patience, how you can have them. And it's not something you can, I'm not selling a course to you, I'm selling myself to you. This came in pain and in a lot of, yeah. So shout out to my mentor, Jeffrey Benson. If you're interested in him, trust me, Jeffrey Benson is a mentor indeed. Yes. So if you're interested, you can come on board and let's make money of this market together. So see you guys next weekend. Okay. So any question, please direct your questions to my email. Yeah, direct your questions to my email. Trust me, I'm going to answer them. If it's in words, I'm going to answer them. If it's in creating a video for you, I'm going to send them to your email. Trust me. So you guys, please always remember, trade what you see what you trade. Have a nice time.